What a good start to the market action this week. A day for the bulls in the Indian equity markets, the Nifty having touched a new life high intraday, and we've closed just 60 points below the day's high. The Nifty has ended the day above 22,100 levels. You're seeing that on your screens. And two stocks that were the biggest gainers today were Grasim Industries and Bajaj Finserve. Within the broader markets, lots of positive action. The mid-caps and the small caps, they've ended the day in the green. And sectorally, we've seen the pharma pack. Those stocks have surged, followed by some of the FMCG names and some of the auto counters. What did we have on the losing side? The Realty names were there. The top sectoral drag today was the Realty pack, and that was followed by the IT index and, yes, the public sector banks as well. But let's get a deeper understanding of today's market action. And for that, my colleague Ansh Bhilwar is joining us from our research bay. Ansh, tell us about the good start we've had to the trading week this Monday.
So Nifty touched record high level. Last time we saw Nifty at record high level was on 2nd Feb. So it was a gap of 11 session. Let's also talk about other broader indices. Nifty mid cap and Nifty small cap also closed in green, advancing for 5th consecutive session. Whereas if we talk about sectoral indices, then we have Nifty Pharma as the top sectoral gainer, which also touched record high level, and so did Nifty Auto. Whereas Nifty FMCG surpassed about 100 DMA, advancing for 2nd consecutive session, led by Imami and United Spirits. Let's also talk about Nifty Bank, and here we are seeing the index advancing for 5th consecutive session, but it has been facing selling pressure at around 46,800, which is also a 50 DMA level. Talking about sectoral losers, here we have Nifty Realty as the top sectoral loser, which have snapped 4-session gaining streak, mainly dragged by Prestige and Phoenix Mills, whereas Nifty IT touched 2-year high but closed in red. Let's also talk about F&O segment, and we are seeing strong long build-up in Nifty, whereas short covering for Nifty Bank, which is a positive factor.
Thanks very much for that. That gives us an understanding of how trading action panned out today. But what is it looking like for times to come? From Ventura Securities, Vinit Bolinjkar is joining us on this edition of India Tonight. Mr. Bolinjkar, always a pleasure having you on the show. Does this new life high that we are looking at convince you that the robust Indian macros have beaten the geopolitical concerns like the impact of the Red Sea crisis, also the worries around higher inflation?
So, the markets have taken all of the negative news in the stride, and we are actually discounting a very, very strong mandate being given to the Prime Minister Modi for a third term. Apart from this, we have to draw consonance from the fact that, the global scenario has also accepted that the continuity in policy will happen because Modi is getting invitations for even June, July and August global travel. So keeping the positive sentiment continuity of the policies, we think that the market is well poised to rally significantly, given the fact that, over the next 2 years, we are expecting a 15% kind of CAGR growth in earnings in the Nifty stocks. And obviously, along with this, mid cap and small cap should also do well. In the large cap, we particularly like stocks like Maruti and SBI, which have underperformed the market but have got very, very strong fundamentals. They've delivered very strong results over the last few months. And we expect strong rally to come in from these two stocks, along with the Adani pack, which should take the index much higher.
Mr. Bolinjkar, you did mention a few stocks year to date. What do you make of the mix of stocks and sectors that have taken the benchmark to a new life high, and how much of the run-up are we going to see the PSUs actually playing a larger role in?
So, the PSU rally will continue. The valuations are very, very benign, considering the growth that is going to portend. And if we take all these factors into play, the efficiencies that the government is trying to build in, and, level the playing field between the private sector and the public sector, if that were to happen successfully, then PSU stocks will continue to rally and we will see more money pour into these stocks as we go ahead.
So after the run-up we've seen in the broader markets, we were expecting the mid-caps and the small caps to take a bit of a breather. That hasn't quite happened, Mr. Bolinjkar. Will they continue to go up?
So, it's very interesting that the mid-cap and the small cap have belied expectations of a breather or around bout of profit taking. What it is telling us is that, the market retail investor participation is very strong. And we could still see that breather coming in the month of March. But it's a great time to accumulate these stocks because we'll be only 1 month away from the new fiscal. And typically we have seen April to May 15th being a very, very strong rally in the markets, and with your mid cap and small cap could give you returns of excess of 18 to 20% during that period.
And while we wait for the minutes of the MPC and the Fed's meetings that give us an indication of how interest rates are likely to move, when they're likely to move, and we also watch commodity prices, especially the current softness that we're seeing in oil prices. To you, which are the biggest moving pieces that you reckon investors should be wary of at this time?
So a couple of things is that while the situation as I've depicted to you is quite optimistic, the valuations are a little tad expensive as we get into the earning season. So we are sitting at about 20 and a half times FY calendar year 24. But on a 2-year time frame, we are very, very cheap at 18 times, with the 17 being the 10-year historical average of the Nifty. So I believe that we are well poised to grow from here. The other thing that investors should keep in mind is that interest rates in the US or the Fed rates are not going to be cut back in a hurry. The reason is that the inflation is very, very strong, and the moment there is any anticipation of the interest rates coming off, the dollar gets sold into, which spikes inflation further. So I think these are some of the things that we need to keep in mind as we trade into the new year.
Mr. Bolinjkar, thank you very much for your precise observations. Thanks indeed for joining us on this edition of India Tonight.